A very good evening to one and all. Respected. Sorry for the interruption. A very good evening to one and all. Respected Dr. H.K. Sharma sir, Principal, Jawaharlal Nehru Rajkeeya Mahavidyalaya, and Dr. K.V.R. Ramanamurthy sir, Associate Professor Head PG Department of Commerce, for giving us an opportunity to organize the webinar. I'm delighted to thank the presence of our esteemed speaker of the session, Ms. Marina Jose ma'am, Resource Person BSc ISF, respected Dr. Ajita ma'am, Assistant Professor PG Department of Commerce, faculties, dear students, and all the participants. I welcome you all to the highly anticipated national webinar on Principle of Investing in Securities Market in association with BSc Limited. I'm Deepa, Faculty Department of Commerce. I'm honored to be the host of today's engaging and insightful session. I want to express my gratitude to each and everyone for joining us today. So today's webinar is all about stock market. So the world of stock market attracts millions of people from all over the world. It's a great way to earn money sitting at home by just investing few hours of your day. The stock market has different types of trading platform which provide unlimited opportunities and plenty of time to the traders for trading. Moreover, majority of the people who prefer to invest and save their money, but when it comes to understanding investment and financial diversification, there is a huge lack of knowledge and investment appetite. Moreover, stock market is not just all about profit, but also there is a risk associated with it. So before involving the world of stock market, it is imperative to have a complete knowledge about the trade and understanding the strategies to reap profit in stock trading. I strongly believe that this webinar will provide the participants a clear understanding of the advantages associated with financial planning and the significance of investing, which will in turn boost their confidence in entering the stock market. Before going further, I would like to invite Ms. Nilima Madam, Faculty Department of Commerce, to deliver the welcome address.
Thank you, ma'am. So I'll continue from here. Good evening, everyone. I'm Nilima. Welcome you all to the one-day national level webinar. As ma'am said, this is on principles of investing in securities market conducted by our PG Department of Commerce in collaboration with BSc Mumbai. Joining the session here today with us, our Honorable Principal Sir, Dr. H.K. Sharma Sir, our Head of the Department, Dr. K.V.R. Murthy Sir, Associate Professor, Dr. R. Palanisamy Sir, Assistant Professor, Dr. Ajita Ma'am, Resource Person for the BSc, and our speaker today, Ms. Marina Jose, my fellow colleagues and my dear students, a very warm welcome to the session. This webinar, just like Deepa ma'am have briefly taught us about the better understanding, this webinar will aid you towards the stock market investments as in our curriculum and syllabus. We have many primary theoretical approach towards stock market investments, financial planning, and their importance. So while making up with a better person as a BSc connected person, we will be able to get a practical approach towards this early investments, which we all have very knowledge on a theoretical portion, but while taking it up on a practical level, it's very risk taking. So for a prior knowledge, it will be very, very beneficial for us. So I request every participant to keep their doubts and questions till the end of the session and check their mute button for a better audio of the speaker. Let's make this session a success. Thank you. Ma'am, Deepa ma'am, could you please take over?
Thank you, Nilima ma'am, for your warm and engaging welcome address. Now, before we dive into the discussion, I would like to remind everyone to please ensure your microphones are muted throughout the presentation to minimize the background noise. We will have a dedicated segment for question and discussion at the end where you can raise your question. Now, without any further ado, let me take a moment to invite Dr. Ajita Ma'am, Assistant Professor, PG Department of Commerce, to address and acknowledge the extensive expertise of our esteemed speaker in the field of investing.
Thank you. Thank you. So, first of all, I would like to congratulate the entire team. It's been a very long time since I have seen a webinar start on time. So, I would like to congratulate the entire team for very efficiently setting up this webinar and punctually, starting it off exactly at 6 p.m. As mentioned, I am Marina, and I represent the company called BSC Limited. So, ma'am, I'll just share my screen. Oh, ma'am, it says that I'm not allowed to share my screen. Ma'am, could you enable my screen sharing, ma'am? Ma'am, ma'am, could you enable screen sharing? Good evening, sir. I'm happy you joined. Or is it an error on my side, ma'am? Because yes, ma'am. Yes, yes, yes.
Now, it's my privilege to invite the chief guest of our webinar, Dr. H.K. Sharma sir, Principal, Jawaharlal Nehru Rajkeeya Mahavidyalaya, to share few words with us.
Hello. Hi. Yes, please. Now, this program conducted by the uh, Dr. Ajita and members. Welcome, and we share our views that regarding the that planning for the investment is the major issue for the investor, and in this, I hope that we will listen all the things about the proper planning of the investment and the risk cover by how the risk management can be covered. So better we will know from the speaker. Thank you and welcome to all members and dear Dr. Ajita. Thank you.
Thank you, sir. We are grateful to our esteemed chief guest. Your presence and guidance have added great significance to our virtual gathering. Thank you so much, sir.
Thank you.
Ajita ma'am, sir, good evening, sir. I'm very happy that you joined. Um, Ajita ma'am, I have shared this soft copy with you on WhatsApp. Okay. Yes, yes. Um, ma'am, yeah, I can see your screen, ma'am, but not my slide. Is it visible? Yes, yes, yes. No, ma'am. Still the same Google page. It's coming. Yes, ma'am. By the slides, ma'am. Yes, yes, yes. So shall I start, ma'am? Okay, thank you. So a very good evening to one and all present here. As ma'am mentioned, I am Marina and I represent this company called BSC Limited. Could we go to the just previous slide, the investor week? So this week, 9th of October to the 15th of October. Ma'am, the previous slide, ma'am. The previous. Okay, so this week we are observing this week as the World Investor Week, and I am extremely grateful for the opportunity given to us to address you this particular week, because this from BSE and SEBI's point of view, this is the most important week of the year. So now we'll go to the next slide. Ma'am, we'll go to the next slide, ma'am. The next one. Okay, yes, yes. So, the investing in the stock markets. If you ask any students, what is your honest opinion about investing in stock markets? The student is very likely to tell you the stock market is a place where people lose money. The students, have you invested in the stock markets? Most probably no. So if you have not invested in the stock market, then where did you get this negative opinion that the stock market is a place where people lose money? So I will tell you where you got it from. A lot of people invested in the stock market, and unfortunately, most of them lost their money. This is not fake news. This is very correct information. Most people lost money in the stock markets. This news has spread to all parts of India, and I'm sure including in Andaman and Nicobar Islands. This is the opinion that stock market is a place where people lose money. Why did people lose money in the stock market? There is something called the principles of investing. Follow the principles of investing strictly, you will make money. You don't follow the principles of investing strictly, that is when you lose your money. So today I will explain the principles of investing. While I am explaining the principles of investing, I will also highlight the common mistakes people make in the stock market, which has resulted in them losing their money. So stock market is a place, investing in shares is a place where you will get, ma'am, the next slide, is a place where you will get very good returns. And when I say good returns, I am talking about returns as high as 20, 30, even 40% you can make it from the stock market. Ma'am, the next slide, please. So that is provided you strictly follow the principles of investing. Now, the first and the most important principle of investing is picking the right companies. So now there's a question for the students. My dear students, there are more than 5,800 companies in the stock exchange. Will you agree if someone tells you that all the companies in the stock exchange, all of them are good, all of them will help your money to grow, all of them are good for the purpose of investing? Will you agree? So I believe you will all say no. All companies in the stock exchange are not good for purpose of investing. We have to identify the good companies. And I will give you a very simple method to use to identify the companies. You go online and get 3 sets of information: sales, for last 5 years, profits for last 5 years, dividend payout for last 5 years. When you get this 3 sets of information, you must look for sales increasing, profit increasing, and regular dividend payout by company for last 5 years. 3 conditions satisfied by the company: sales was increasing, profit was increasing, regular dividend payouts. 3 conditions satisfied by the company. The company is a good company. You will get very good returns, 20, 30, 40% returns. Invest your money in that company. Ma'am, next slide. So all this information, you get it free of cost online, and you get it from BSE's website also, which is bseindia.com. So you go to BSE's website. Now, the top right corner up there, the provision where you can type the name of the company. So what I did, I wanted the data of Indian Oil Corporation. So I went to BSE's website. I typed Indian Oil Corporation up there, and ma'am, the next page. And this is the page. Next page. Okay, this is the page I got. Come to the left side, financial results. You click on results. Ma'am, the next page. You click on results, and this is the page you will get. Now by default, you will get quarterly results. I wanted you to get the results of last 5 years. So click on annual, and the results or data of last 5 years presented to you in a tabular form will appear on your screen. BSE. Why did we design our website like this? We designed the website like this so that it becomes easier for investors to study the company, and it becomes easier for investors to compare. So make use of BSE's website. It will definitely help you to save a lot of your time. The next. So sales, profit, and dividends are minimum 3 sets of information you must collect. If time permits, go ahead and get additional information also. You can get additional information like, the expansion plans of the company. You can get additional information like what are the new products or services the company plans to introduce. The top management, were they involved in any frauds or scams? So every additional information you collect will help you in understanding that company better, and it will help you make a better decision whether to buy the shares of that company or not. So you don't have time. Go to BSE's website, get sales, profit, dividend last 5 years. You have time. Get as much information as you can. It will help you make a better decision. My next. So that was the first principle of investing, and it is also the most common mistake people make in stock markets. For many years, people were of the opinion all companies were good. What were they doing? They were randomly picking companies and investing, and they are still making the same mistake even today. The second mistake we find investors making in the stock market is investing in penny stocks. So I will explain that. I told you in the stock exchange, we have more than 5,800 companies. The share prices of these companies are all different. We have companies, one share is around 100 rupees. We have companies, one share costing around 1,000 rupees. We also have companies, one share is 1 lakh rupees. You know the company called MRF? Of course, we all know MRF, right? So MRF, one share is more than 1 lakh rupees. And we also have companies, one share is 50 paisa, 75 paisa. Now, penny stocks are defined as all those companies whose share price is less than the face value of the share. In the stock exchange, most companies, face value is 10 rupees. So if the share price is less than 10, it's a penny stock company, you are supposed to avoid such companies. Always look out for sectors that are growing. Look out for companies that are growing. So how do we identify a company that is growing? You must look out for a company that is changing. A company cannot grow if the company does not change. 3 years back, I had never heard of this word called webinar until COVID came. So COVID was a crisis that forced us to change, and crisis is the reason why we change. No crisis, we will never change. When I was a student, which was about 20 years back, an article had come in the paper. The article said, based on the consumption of crude oil, based on this consumption of crude oil, how we used to consume crude oil many years back, based on how we used to consume crude oil in 1999, 2000, 2001, scientists have calculated that crude oil will get over in around 40 or 30 to 40 years. 20 years has already passed since I read that article. So if that article is correct, crude oil will get over in another 20 more years. That's probably prompted automobile companies to try to come out with cars that will not depend on petrol or diesel to run. They are trying to come out with cars that will run on battery or any other source of energy. So what will happen to an automobile company? They are not, they are relaxing. They're not going to change. They're going to continue making only petrol diesel cars. What will happen to that company? That company will close down in a few years' time. So when things around us are changing, companies also must change. A company cannot grow if it does not change. At the beginning of the session, I told you that the good companies in India will give you 20, 30, 40% returns. The same good companies, during a time of crisis, the returns will fall. There will be a dip in the returns. Please don't panic. You bought the shares of a good company. All the good companies in India are run by very good professionals. These professionals, they know how to take care of the company when it goes into crisis. COVID was one crisis. COVID was a crisis that it was a collective, all companies collectively went into a crisis because of COVID. Before COVID, all companies in India at some point of time went through their own crisis. I'll give you an example. And this happened in the year 2015. This happened 8 years back. My dear students, do you remember? 8 years back, the government of India had banned the sales of Maggi noodles across the country. So our favorite food, Maggi noodles, got banned. When Maggi is owned by a company called Nestle. When Maggi got banned, this was a crisis for Nestle. And this was the first time in 17 years, Nestle made loss. So for 17 years, Nestle was making profits. The profit was increasing. Maggi got banned. From profits, they went all the way down to loss. Did Nestle close down? No. Nestle is a very good company run by very good professionals. Those professionals did what had to be done. In a few months' time, Maggi came back to the shelves, to the shops. So crisis happened, even to the best companies, TCS, ICICI Bank. They have all gone through their own crisis. These companies are very good companies. They did not close down. They have come out of the crisis and functioning well. So invest in the good companies. The good companies have good professionals. Crisis happen, they will come out. The third mistake we find investors making in the stock market is investing in shares with the expectations of making profits short term. Now, stock market is not the place for short term gains or short term profits. So when you are investing in the stock market, we expect you to keep the shares with you for at least 5 years. Long term means 5 years or more. So now with my hands, I'm going to demonstrate to you how the stock market moves. Okay, with my hands. You bought some shares today. Stock market is here. Tomorrow is Saturday, Sunday. Monday, stock market went up. You are very happy. You call all your friends, you show them, and you call them and said, see, I bought shares on Friday. Today, the prices have gone up, and you were excited. The day after that, it came down. You were not so worried. You were calm. The day after that, it came down again. Haha. Now you will start getting worried. Even I get worried. Don't worry. Even I get worried. But please stay calm. And the day after that, it will go up. Then it might come down. Then it will go up 2 days. Then it will come down 2 days. See, you bought the shares at this level. After 8 working days, shares are still at the same level. That is how stock market is. Short term, stock market is very unpredictable. Short term, stock market is the most boring place to invest money. Keep the shares with you. And the markets will go up and down and up and down, 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 up, down, up, down. After 5 years, the stock market is here and you make your money. You bought the shares at this level. Ups and downs did not stop. Some days it was up, some days it was down. But the ups and downs have an upward trend. After 5 years, stock market is here, and that is how you make your money. Now, Ajita ma'am, I'll need your help. Could you just open a new tab? Keep this page like this, ma'am. Could you please open a new tab and go to Google? Okay, go to Google. So now, with the help of Ajita ma'am, I'm going to take you online. I'm going to take all the students online, and we are going to just compare the price movement of shares short term versus the price movement long term. All right, ma'am, could you just type HDFC Bank, HDFC Bank share price, and share price, yes, ma'am. Okay, all right. So when you see a red graph, it means the market has HDFC Bank came down today. Ma'am, you see 5D. Ma'am, next to that, you see 5D up there. Yes. So this is the price. Yes, ma'am. Yes, ma'am. So let us see how HDFC Bank performed last 5 days. So 5D, ma'am. Last 5 days. Days. 5D. 5 days. Yes. Okay. So this is the graph of HDFC Bank last 5 days. A slight slope upwards. Now let's see how HDFC Bank progress or performed last 5 years. Ma'am, 5Y. Yeah. So if you see, HDFC Bank gave you 55% returns the last 5 years. So ma'am will take another company. Ma'am will take Infosys. So up there, right, ma'am? Instead of HDFC Bank, just type Infosys share price. Okay. So Infosys was down today. Ma'am, last 5 days. Let's see what Infosys did last 5 days. Infosys was down last 5 days. Let's see what ma'am Infosys did last 5 years, ma'am. 5 years. Infosys gave you 109% returns last 5 years. Ma'am, we'll take one more company. Ma'am, we'll take maybe Berger Paints. Berger. B. BE, yeah, Berger Paints. Yes, yes. So Berger Paints was up today, unlike in HDFC Bank and Infosys. Last 5 days, let's see what it did last 5 days, ma'am. Berger Paints. Okay, you see the graph, very flat graph, last 5 days. 5 years, ma'am. Last 5 years, Berger Paints gave you 140% returns. So that was what I was trying to tell you. Short term, you can never predict. Even the best companies in India, the graph can be flat or it can even come down in 5 days. Just hold on to those shares for 5 years. You will make money. Ma'am, we can go back to this session, ma'am, to the presentation. Quick selling means selling during a crash. I told you stock market has its ups and downs. Yeah, stock market has its ups and downs. Now, every 5 to 6 years, the stock market has a big down, okay, a big fall, a big crash. When there is a big fall in the stock market, we call it a stock market crash. Many investors, they are calm throughout, right? Normal ups and downs, they are calm. But when they hear the news of a crash, they start to panic and they start to sell off their shares. We'll go to the next slide, ma'am. Next slide. Okay, yes. So they panic and sell off their shares during a crash. If you sell during a crash, you are very likely to lose your money. BSE Sensex was introduced on the 1st of January 1986. On this particular day that BSE Sensex was introduced, it closed at around 500 points. A few weeks back, BSE Sensex crossed 67,000 points. Now, I told you that BSE, the stock market crashes every 5-6 years. How did 500 reach 67,000 if the stock market is crashing every 5-6 years? How did 500 reach 67,000? The only explanation I can give you here is stock market crashes. Yes, every 5-6 years it crashes. The stock market recovers after the crash. So it crashes and it recovers. So you get the V graph, the crash and the recovery. So what you have here, this particular graph I taken a screenshot of, you see a big V, the V graph, a big V, a crash and a recovery, followed by a small crash and a recovery. And if you take a close look at this graph, you will see that the stock market graph consists of many crashes and recoveries. So small crashes and recoveries. But so the stock market crashes and the stock market will recover. Ma'am, the previous slide, ma'am. So previously, okay. So the stock market will crash and the stock market will recover. All you need to do, just stay calm. Never borrow money to invest in the stock markets. Borrow money if there is a medical emergency in your family. borrow money to pay your child's tuition fee. But please, please don't go to neighbors' houses borrowing money to invest in stock market. That please don't do. Keep reading about the company even after investing. I told you to read before invest. Get information before investing. Now you have to continue reading even after investing. You don't have to read every day. Every day reading not required, but you must read once in a while. You must know what the company is doing. You must know in which direction that company is going. Because the reason why I'm saying this is it has happened. It doesn't happen often. It is very rare, but it has happened. The top companies in India have closed down. Have you heard? Do you know that we used to have a car called the Ambassador cars? So when I was a student, our Indian roads were filled with Ambassador cars. Today, you don't find Ambassador cars on Indian roads. Ambassador cars was owned by a company called Hindustan Motors. The people who bought the shares of Hindustan Motors those days made a lot of money. The same people, towards the end of 1980s or beginning of 1990s, they would have noticed that Ambassador cars sales and profits are coming down, and Ambassador cars competitor Maruti sales and profits are going up. So when you see something like this happening, you know it is time for you to change your shares. So that is why you have to keep reading. You have to keep reading about the company once in a while. You must know what the company, in which direction the company is going. You must stay connected with that company. Monitor your investments regularly. When you buy shares, the shares will come to your Demat account. When you keep shares in your Demat account, you will be entitled to dividends. Dividend is money. Money will not be credited to Demat account. Money will be credited to your bank account. In case you don't get your dividends, please don't panic. Don't think, stock market scam, somebody has stolen my dividends, somebody stole my dividends. No, it has happened due to an unintentional clerical error on somebody's part. All you need to do, pick up your phone, call up SEBI's office. SEBI has offices across India. I do not know if they have an office. Let me just check if we have an office in ports in Andamans. I will just check this and SEBI. Let me just see if they have an office in Andaman and Nicobar Islands. It says yes, we have an office in Andaman and Nicobar Islands. So you can call up SEBI's office in Andaman Nicobar Islands, or you can call up SEBI's office anywhere in India. Explain your complaint. Your complaint can vary. It can be, I did not get my dividends. I did not get bonus share. I have a complaint against a stockbroker. You can have any complaint. They will help you register the complaint, and in 15 days, your complaint will be resolved. So monitor your investments. If you have any complaint, inform SEBI. Now, the next slide, man. The next one. Okay. Never wait for a lump sum amount of money before investing. A lot of investors tell us, when I get 5 lakhs, then I will start investing. When I get 7 lakhs, then I will start investing. We are working middle class people. We don't get 5 lakhs, 7 lakhs coming just like that. What we get on a regular basis is our salary, and we want you to invest only from your salary, and I will explain to you how to invest from your salary. Ma'am, can we go a few slides back? Previous slides? Okay, it's still going, man. Still good. That's a bank FDs. That slide. Bank FD, mutual funds. Still go back, ma'am. Still back. Okay. Yes, ma'am. Yes, ma'am. No, ma'am. The next one. The next slide. The next one. No. Okay. Yes, ma'am. Yes, ma'am. Okay. So now I will explain to you how to invest from your salary. Salary has come. Some amount of your salary is for the expenses of that month. Some amount will remain unspent. From this savings, from your unspent part of the salary, you can start a bank recurring deposit with just 1,000 rupees. You can start a post office recurring with only 500 rupees. You can start investing in mutual funds. You can invest in mutual funds with even 100 rupees. But let's say you are going to invest 500. You can invest less than that in mutual funds. So, but let's just say 500. So 1,000 in bank recurring, 500 in post office, 500 in mutual funds, making it 2,000. Buy 10 shares Indian Oil Corporation. Indian Oil Corporation is around 100 rupees. So 10 shares will be 1,000 rupees. Full stop. The next month, repeats. 1,000 rupees in bank recurring, 1,000 rupees, 500 in post office recurring, 500 in mutual funds. Buy 1 share Berger Pinks. We saw it's around 500 rupees, 1 share. Stop. Third month, repeat all the other investments, bank recurring, post office recurring, mutual funds. Buy 1 share ICICI Bank. It's around 900 rupees. Stop. The fourth month, repeat all the other investments. So now we bought Indian Oil Corporation. We bought Berger Paints Oil Company, Paints Company. We bought banking company, ICICI Bank. Now buy software. Buy 1 share Infosys. It's around 1,005. Fifth month, repeat all the other investments. Buy 2 shares ITC. ITC, which is around 450 rupees. So buy 2 shares ITC. 6th month, buy, repeat the other investments, buy some pharma company. 7th month, buy a textile company. 8th month, come back here and repeat Indian Oil Corporation. 9th month, Berger Paints. 10th month, ICICI Bank. Then the next month, Infosys. Then the next month, ITC, pharma, textile. Then come back again and repeat. Why am I asking you to repeat the same companies? Remember, I told you to read about the companies after investing. Okay, it is not possible for us to read and keep track of the performance of 60, 70 companies. We are working professional. We bring office work home to complete. We have children to take care of. They will fall ill. We have aged parents. We have to take them to hospital regularly. We have family occasions that we have to compulsorily attend. We have so many things to do at home. There is no time for us to keep track of all the companies in the stock exchange. A study was conducted. The study said a working professional can comfortably keep track of 7 to 8 companies. Anything more than 8 companies, it is difficult. That is the reason why I said invest in 7 companies, and I said then repeat the same companies, because we want you to keep track of these companies. Okay, so comfortable number is 7 to 8. Though we showed you example, Ajita ma'am showed you those examples. In 5 years, that does not mean you must put all your money in stock markets. No, you are supposed to spread out your investments across different investment options. Shares must be one of your investments. In shares, do not put all your money in ICICI Bank or in Infosys. No. You are supposed to put your money in 7 to 8 different types of companies. So we had oil, we had paints, then we had bank, then software, then we had ITC is FMCG, pharma, textile, different types of companies. We are not expecting you to buy 500 shares, 1,000 shares, no. We are expecting you to buy initially when your salary is very much basic. We are expecting you to buy 2-3 shares. When your salary increases, then your investments must start increasing. Then instead of buying 1 share, 2 shares, you buy 5 shares, 10 shares. So that is how we expect you to invest. Ma'am, during the other slides, ma'am, where we came back. Yeah. Previous one, ma'am. The previous one, ma'am. No, next one. Next one, ma'am. Okay, yes. So, never invest purely based on tips you get from TV channels. Collect tips from TV channels. No harm. I also collect tips. But before you invest, find time to go online. I collect tips from TV channels. I collect tips from my friends. But before I invest, I will always go online. I will read about the company. I will go to BS's website, get sales, profit, dividends for last 5 years. If I will try to get more information, if I am comfortable about the information I have received, I have seen online, then only I invest. I buy the shares of that company. That is what I do, and I want you also to do the same thing. Stay away from people who say, I know how to double money in 3 months in the stock market. I have doubled money. The guy next to him will say, I can triple money in 6 months in the stock market. When you hear that, you get up and run. Run fast, because every single person who has invested in this, I will double your money, triple your money, every single person has lost their money. There is not one person in India who has got 1 rupee back. So that is the 5th mistake we find investors making in the stock markets. So quickly, what are the mistakes? 1, investing without getting information. It's a very common mistake people make. 2nd, investing in penny stocks. Those shares that cost 1 rupee, 50 paisa, you have to avoid such companies. 3rd, investing in the stock market with the expectation of making profits short term. Making profit short term will not work because price doesn't go up like this. Price is very flat if you look at it short term. 4th, selling off during a crash. 5th, investing in I will double your money, I will triple your money kind of schemes. All this is how people lose money in the stock markets. How do people make money in the stock markets? 1, the next slide, ma'am. So how do people make money in the stock market? 1, never compromise on the company. Make sure you are investing in the best companies in India, the best, no compromise. Your hard-earned money, pick the best companies. 2nd, never put all your money in the stock market. You should never do that. You are expected to spread out your investments across different investing options. Shares must be one of your investments. In shares, don't put all your money in one company. You have to put your money in 7 to 8 different types of companies. 3rd, make it a habit to invest every month, to invest regularly. The earlier you start investing, it is you who will benefit. And for the investment you make in stock market investments, you must be mentally prepared to keep those investments for at least 5 years. So my dear students, when you start working, when you start earning, follow these principles of investing strictly. You will make money and you will make plenty money. This has brought me to the end of my session. Ma'am, yeah, so this brought me to the end of my session. I now place the session open to the students. If you have any queries, please feel free to ask.
Thank you, ma'am. Thank you for your detailed and insightful presentation. Your expertise and insight on stock market have provided us with valuable knowledge and perspective regarding the principle that needs to be followed of investing in securities to reap profit. We have now reached the interactive part of our webinar. Yes, now it's time for question and discussion segment with our esteemed speaker. We encourage all the participants to actively engage by sharing your question.
Ma'am, this is Neelima. I have a question.
Yes.
Ma'am, as you said, you were very practical towards investment and this knowledge. I think it was very beneficial. Thank you so much.
Thank you very much.
And since you have included the practical approach, ma'am, could you just, in an assumption, tell me what could be a best investment amount in an initial stage for a student as well as a working professor?
Okay, investment amount. Ma'am, there is no minimum, no maximum. If it in your savings, well, as whatever your savings, we suggest that you diversify across different investing options. And if it comes to shares, you can if you can start buying one. There's no minimum amount, or as in money. There is minimum quantity, which is one. So you can identify any good company, or you can identify.
So if diversified,
yes,
what could be the safer option for diversification, like 5 or 3, whichever numbers would be?
As in a number of the more you diversify,
Companies.
ma'am. Yeah, the more companies. Okay, ma'am. The more you diversify, or the better. The more you diversify, the better. When it comes to stock markets, but at the same time, remember, as I mentioned, you have to stay up to date with the performance and with the company, what the company is doing. So a study was conducted not by BSc but by an independent agency, and they came out with the result was, or whatever the data they had come out was, we can comfortably keep track of 7 to 8. So when you are diversifying, diversify to as much as 7 to 8. If you think you can keep track of more companies, you can still you can make it 10. If you feel that no, you don't have time at all, you can no need to invest 7 to 8. You can bring it down to 5 or 4. If you feel that you don't have time at all to track.
Okay, ma'am. Thank you, ma'am.
To 8 companies. So
Dear students, if you have any questions, please proceed.
yes, ma'am. Ma'am, yes. All right, ma'am. Okay, I will tell you some. I took 2 banks. I took a private bank and I took a public sector bank. So when I was your ma'am, I'm sorry. Am I having a? I think I'm having a connectivity issue. Am I having a connectivity issue?
Ma'am, your voice is breaking.
Am I? I'm having an issue here. Okay, ma'am, I think my net now is fine. It's clear. So, yeah, ma'am. Okay. I have I took two banks. I took two banks. The reason why I chose bank is because it is very regulated. Banking system in India is regulated. We don't hear the news of a bank closing down. So it's more yeah, I took bank because it's more of a safe investment. Other companies can close down, but we have never heard of a bank closing down. So in my investment, I chose two banks. One is SBI and the other one is ICICI Bank. These are the two banks I chose. Then I have taken Indian Oil Corporation. The names I gave you, right? ITC, Berger Paints. These are the companies I have invested in. Berger Paints, ITC. In textile, I invested in Trident. So I invested in a software company. I've invested in Tanla Solutions, Tanla Platforms. Then which are the so I have Indian Oil. I have SBI. I have ICICI. I have Tanla. I have Berger Paints. I have ITC. I have Tata Motors. Yeah. So these are the companies that I have invested. Now, what I do is I just top up. I just keep adding to the same companies. So I have been investing from a very long time, and I just keep from for many years now. Now, when I invest in the same companies. What kind of investment should be avoided in the current time? In the current time, investment should be avoided. Any company that is having a lot of business in the in Europe, any company that is highly dependent on Europe for its business, at present you can or you can invest, but don't expect returns anytime soon because of the volatile situation right now. I will not say don't invest. I will say invest because the shares have all come down. But don't expect returns anytime soon until those things settle. Some stocks for SIP. SIP is mutual funds. So SIP is there are many mutual funds. You have to check the returns of those mutual funds before you invest. How can we? Which is good, mutual fund or so SIP is a type of mutual fund. SIP is you are investing. How do I say? Regularly, monthly, systematically every month. That is one way of investing. The other way of investing is one-time lump sum amount. So you choose which is good for you, whether you want to invest every month, little amount, or one lump sum at the end of the once a year. So you can choose which suits you best. So what I normally tell students or investors. Take SIP. Now, anytime the market crashes, when the market comes down, suddenly the market comes down, then you put in a lump sum. So then you put a lump sum because then you can get more units at a lower rate. So what is SIP? SIP is systematic investment plan where you give a standard instruction asking them to debit your account every month for maybe 500 rupees or 1,000 rupees. and they will invest that in mutual funds. So, ma'am, if you don't mind, ma'am, I have a session at another college at 7. I've asked for an extension. So, if you don't mind.
Yes, ma'am. Thank you all for your engaging questions. Thank you, madam, for taking time to address all the questions. Your expertise has truly enriched our session. It's now the appropriate time for feedback. Dear students, your feedback is very important to us. If any students would like to share their thoughts, suggestion, please share freely.
Yes, ma'am. Myself, Vandana from MCOM final year. So, thank you, Miss Marina, ma'am, for the webinar today. It was a pleasure to attend. Through this webinar, we have gained so much knowledge about the stock market, the investing options, and the principles of investing. And it was very thoughtful of you to practically show the graph of different companies that made us understand about the difference between short-term and long-term changes in the share price of the company, and also the principles of safe investment. The webinar was very informative. Thank you again for sharing your knowledge with us, ma'am. Thank you.
Thank you, Vandana, for your valuable feedback. Now, I would like to invite Ms. Anu Madam, Faculty Department of Commerce, to share your feedback with us.
Good evening, ma'am. Good evening, everyone. First of all, thank you for this wonderful presentation. Literally, I'm saying I really got a new experience in this financial, how to manage my funds and how to invest in stock market. And thank you for sharing us with the principles of investing. First one, we have to look towards sales, profit, and DP ratio. Thank you so much for providing that valuable information, ma'am. And surely we will definitely try to invest in the stock market. And once again, I will say thank you so much, ma'am. I look forward future seminars as well. Thank you so much.
Thank you, Anu ma'am, for sharing the constructive feedback. As we are near the conclusion of our webinar, we would like to express our gratitude to our esteemed speaker of the session, faculties, and all the participants who have made this webinar success. For that, I would like to call Mr. Sumit Sir, Faculty Department of Commerce, to propose a vote of thanks on behalf of Postgraduate Department of Commerce, JNRM.
Thank you, ma'am. Good evening, all. First of all, I would like to thank our principal, Dr. H.K. Sharma, for giving his consistent academic support for organizing such programs. I also thank him for giving opportunity to our department for organizing this program virtually. Thank you, sir. I express my sincere gratitude to Ms. Marina Jose Karaikal, resource person, BSc ISF, for giving a wonderful and lively session and making the youth aware of the basic knowledge of investing in securities market. We, the faculties and students, has got in-depth knowledge about the stock market and will also pass the information to the other people as well. We are also inspired by the way our speaker has handled the interaction session. It was really very fruitful. Thank you, ma'am. I also thank our head, PG Department of Commerce, and Dr. R.P. Palaniswamy, Associate Professor, PG Department of Commerce, for their help and support. I thank Dr. Ajita Narendran, convener of the program, for organizing such a session for our college students and faculties as well. I request her to conduct many more programs in future. I thank Ms. Deepa, faculty from the Department of Commerce, for conducting this program smoothly. I thank Ms. Nilima and Ms. Anwes Nair, faculties from the Department of Commerce, for their active participations. Most importantly, I thank all faculty members, students, being so patient and listening the speaker, and for their active participation in interaction as well. Lastly, I would like to thank the convener for giving me this wonderful opportunity. Thank you, ma'am.
Thank you, Sumit sir. Once
Ma'am.
again, I would like to
Hello.
thank you, Sumit sir. Once again, I would like to express my gratitude to everyone for your active participation. Also, I would like to express my sincere gratitude to Dr. Ajita Ma'am, Assistant Professor PG Department of Commerce, for giving me this wonderful opportunity. Thank you, ma'am. I hope you found today's session valuable. Thank you all for joining us today. Have a great rest of your day. Thank you so much.
Thank you, ma'am. So, ma'am, with your permission, may I exit the session?
Hello, ma'am.
Thank you, ma'am.